If you woke up from a coma and the first thing you see is a stock market, you'd think everything is fine because it's been going up and up. Sure, it might have dropped 30% in March, but it has recovered more than half of its losses, and it appears it's going to test its new highs within a few months. But if you watch anything aside from the stock market, maybe any news about anything else, you'd find that unemployment is near 15% and close to 30 million Americans are out of work. There are businesses shutting down, and the anchors of all those shopping malls, JCPenney's, Nordstrom's, and Macy's, are on the brink of bankruptcy. Then you'd think the world is falling apart. But then why the disconnect between the stock market and the real world? You wonder, since stocks are shares in companies that do hire employees and provide goods and services which are no longer open, why are their stock prices rising? To answer that, you need to realize two major things. The first is that the stock market is not about today. The stock market is based on what will happen in the future, or at least what investors perceive will happen in the future. Sometimes this forecast is an overreaction, and other times it's an underreaction. Let's look at Amazon. For the majority of its history as a public company, it's reported a loss. No income, no real tangible reason for Amazon to be worth much. But the stock kept going up, and up. What investors are betting on is the future potential of Amazon. This zero income was reinvested in research and development. Investors were confident enough that Amazon will eventually make a profit, and a lot of it. That's the same for a stock market as a whole. It's basing its euphoria and panic on expected outcomes. When this coronavirus pandemic started getting serious, the stock market reacted violently. Within a few weeks, the stock market dropped significantly. The S&P 500 dropped 34% as the bad news reinforced the drop. Then March ended. The pandemic didn't subside, and in some places it got worse in April. But the stock market had priced in all the bad news the previous month, and now it's looking into its magic crystal ball into a brighter future. April saw a nearly 20% jump, and a 31% jump from its March 23 low. Now, does that mean the worst is over? I don't know. In October 1929, the stock market crashed, but it recovered a few months later. And then it crashed even further, where $1,000 invested would be less than $100. The stock market is a forecast machine. Basically, it's not a picture of what's happening now, but what is expected to happen in the future. And according to the stock market as of this video, the future looks rosy, but it can change any second. The second major thing is the Federal Reserve cutting interest rates to near 0%. That has made US Treasury bonds almost worthless. The 10-year bond yields 0.64% per year. That's worse than a savings account. Low interest rates, currently at 0.25%, means money is cheap. And it's cheap to borrow since the Fed has been printing so much money to stimulate the economy. When money becomes cheap, the value of cash goes down. More money swimming around in the system means the existing supply of money has its value diluted since more and more cash is swimming around. So if you held onto your cash, it's quickly losing its value, or other words, its purchasing power. Now this is obvious to many people, so the only way to stem inflation is to exchange your cash with assets. In this case, stocks, real estate, gold, cryptos, whatever goes up in value. Since the stock market is easy to buy, most of that cash goes into the stock market, raising prices on just about every one of its components. Even though many of these stocks are losing money, for instance Disney, which has lost more than half its income with its theme parks closed, it's up 27% from its most recent low. People rather not hold on to cash because it only depreciates during an inflationary environment like right now. Assets rise during this time, and that's where all the money is going. If you enjoyed this video, please consider dropping a like and subscribing to my channel. As always, take care of your money.